Hello, my name is Philip Kirby, and today I will be explaining the how I got 555.41 company APV in the capital budgeting finance simulation. Um, at first, let's go ahead and take a look at our financial snapshot from 2014. These are the in 2009. 2009 is when you start. Previous would be obviously 2013, and current would be right now 2000, which is 2014. So, starting out, my revenue happened to be 245.75, and in 2013 it was 336.95, which is a very decent increase. And this year, 2014, it is 358.93, which is slightly above the forecast. It will it The way it is set up right now, if the simulation was to continue, that number would be the actual would be growing and growing and growing a lot more. But we will get to that later with explaining all the projects. In 2009, my operating income was 22.60. Last year, 2013, it was 36.85. And this year, it is 41.18. So it went up about 5. And it is, again, slightly above the forecast. Not, I would say it's probably, these two are pretty close. I can't really tell. They're both about the same. And then net income in 2009 was 13.56. My previous from last year was 22.11, and currently is 24.71. Excuse me. My company APV that I finished with was 555.41 again. And let's go ahead and take a look at our income statement and balance sheet. So net sales, that is a big one you want to keep going. And for this simulation as well, even though you cannot continue past 2014, it will show you your numbers all the way to 2024, which is 10 years above to see, because most of the projects, there are some projects that are listed, we cannot look at them right now, but most of the projects are time based. So you can't really, you know, during the simulation, you're not able to look at the long term effects. So a lot of mistakes happen are people would do short term goals and not actually see the full, because they cannot actually see the full 10-year cycle due to the how short the simulation actually lasts, which is only 5 years. But anyways, net sales, the future projections from now to 2024, they double from 200.99 all the way to 485.23 in 2024, which is great. That is exactly what you would want to look for. Um, you would want to look for constant growth. It doesn't have to be exponential or linear, as long as it meets your company goals. Really, every single one is situational for sure. Cost of goods sold will also grow as long as net sales is growing. That is impossible. It's lower unless there is some sort of new discovery that, and it again is completely situational depending on what company you are and all of that. Gross profit had also increased from 80.28 all the way to 208.41 in 2024, which is good. Anything profit or sales, obviously, you're going to want to increase, and anything with sales and profit comes cost of goods sold. There's no way to avoid that. Moving on down the list a little bit here, depreciation. Depreciation is a very important one to minimize at the most. Um, you want to make sure everything that machinery wise is going to be cost effective. You're not going to want to pay a bunch of depreciation on machinery that you may not even use that often, and everything in a business should obviously be cost effective. And earnings are have a drastic increase into 2024. I planned my project to be a little more long term based, with a lot safer of a route, but also maximizing my potential profit without risking too much and spending too much. Um, and this is what I got. Obviously, the results were very successful. Moving on to the balance sheet. Well, what I mean by successful were the numbers in the income statement were successful. Very ideal numbers for what you were going to want to see in the simulation. The balance sheet of our assets. Our investments obviously keep going. As long as we are making more money, we are obviously growing as a company, which makes us need to invest more money, which in turn gives us more assets to put right back into the company. And that's just how you continue to grow. Cash and cash investments grow from 4.58 all the way to 12.61 in 2024. Accounts receivable also grow from 35.3 all the way to 82.81, which are some huge increases. Inventory goes from 33.84 to 54.89 in 2024. Moving down to some bigger assets, or not bigger assets, net current assets, gross property, plant, and equipment is technically a bigger asset. I was right. It goes from 169.88 to 269.97. With it going up 100, that obviously shows that something has been bought that is larger than just maybe a little piece of equipment here. We were talking about a piece of property, and maybe I'm not sure how it could be financed. It could be a finance property, and that's why the number slowly increases. Depreciation will also increase at this time throughout here because of obviously the growing company with long-term investments. Liabilities. Liabilities are exactly what I was talking about. Growing long-term investments, you're going to have more liabilities as well. As with more assets come more liabilities every time. So accounts payable go from 25.25 to 48.07 2004 or 2024, excuse me. It doesn't really grow too much. It kind of stays right in the 3 to 4 ads each time. Long-term debt. Long-term debt is another one. If you're going to make a lot of long-term decisions, you're going to have long-term debt as well because it's going to take time to pay off those long-term decisions. But in the long run, it might be a higher risk. It might be a lower risk. You never know. It depends on numerous things and is very situational. Moving on to the cash flow statement. You can see net income goes from 4.38 to 30.01 in 2024. And depreciation goes from 11.64 to 13.95. So it did not increase as much as I would have thought, but it's still like a great number. It's not bad. It's not a bad number. I would expect for that number to be a little bit higher due to some other due to the company having long-term investments and because of what the depreciation was on the balance sheet. I can find it real fast. Yeah, the pattern is slightly different, but nonetheless, it is still successful. Debt-free cash flow. Debt-free cash flow is projected to be 24.82. So that is a high climb from 9.84 to 24.82. The discounted cash flow moves very interestingly. It goes from 9.84 and it drops down in 2018 to 8.77, but then drastically increases to 79.28. Some project details. Let's